on today's show, how advisors can benefit from the rejuvenated life settlement market. Part one of this week's series on Life Insurance Settlement Update for 2014. With President and CEO of the Life Insurance Settlement Association, Darwin Baston. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician in Dinsmore. Let's get down to business. Well, welcome to the show, Darwin.
Thank you, Steve.
Well, I'm just excited because I know that everybody of our advisors that are watching this show today are going to say, man, I thought life settlements were kind of like in the doldrums. And I just spent time with some funders telling us, Steve, we are crying for policies, really looking for contracts. And you're saying, after our talk a little bit last night, you were saying that this is a totally rejuvenated market and life settlements is coming back big time.
It has. It's a big rejuvenated market since 2008 when we went through the meltdown. 2009, 2010, at first there was denial that there was, the market had gone down, and then there was let's regroup and figure out what's going on. But in today's environment, investors are looking for a place to put funds that have a good, steady return because interest rates have been so low for so long. So they're taking another look at this market. Well,
this market is huge. I mean, I'm looking at 868 U.S. companies. That's a big, big volume of carriers.
Yeah, absolutely. Not only that, they hold about $10 trillion, with a T, trillion dollars worth of individual life insurance.
Now, it's interesting because in many of our distribution networks, a lot of people do basic auditing of policies on an annual basis. It's part of the protocol. It's good review practice for an advisor. It's interesting that out of all the ones that we review, about 35% of them never get changed. They really are, they're holding. There's really nothing you can do to advance the premium, get the premium lower, advance the benefits to get more benefits. The strategies are still in vogue, so they just leave them alone. But out of that portion that really isn't touched, there's a whole portion there where strategies aren't really today, presently and currently used by the actual client. So all of a sudden we're stuck with a contract or a policy that we really don't have any value or need for. And with the marital deduction act going up so high, I've noticed that certain people are looking at this again and saying, I wonder if there's a good cash out position for my life insurance contract.
I think that's true. And I think the marketplace suffers from a lack of understanding by so many people and so many advisors. It's also surprising that they don't know that the life settlement market exists, or that they have the ability to sell their life insurance policy.
Now, are you surprised? I was when I started finding this out, that funders are actually saying there is a shortage of policies right now.
Oh, I'm not surprised at that all either, because the market had been so we call it slow over the last couple of years, that all of a sudden, if a funder said, I have $100 million that I'd like to put into this, how long will it take you to put that money to work? That's a lot of policies. And I think our challenge today is making an awareness among all of the consumers and all of the advisors that touch consumers that this is a possibility. So are the policies out there? Yes. Have we gotten to them? No. Are the consumers concerned? I mean, are the investors concerned about being able to put them? Of course they would. They don't want to take 4 or 5 years to put a $100 million portfolio together.
It's interesting because you brought up the consumer. I didn't think, even though we had the high point of life settlements back in 2007 and 8, it was very high. And all of a sudden, I don't know if anybody knows about it. I don't see much on the web. Nobody's really talking about it on Google. I don't see landing pages really extolling the virtues and benefits of life settlements. So if my own industry isn't talking about it, I can't imagine the consumer knowing anything about it.
I think that's absolutely true. That's absolutely true. And that is our greatest opportunity. You realize that last year, probably $40 billion of life policies actually lapsed. Now, you're talking about policies that may have had value. This is by people over age 75. May have had value, and they simply didn't understand or know anything about the life settlement market. They didn't know it was a possibility, and they just lapsed the policies.
Well, see, that's a really big number now. So let me just see if I can get my head around that. If I have 40 billion, and did you suggest that 40 billion of that is coming from mostly geriatric market?
Yes, that's correct.
Well, that's astonishing to me. So I'm wondering, why is the strategy, the original reason why they purchased the life insurance, why that's not online any longer, why that's not in vogue any longer? So they for some reason, they don't see the necessity of keeping it in force, and now they didn't know that they could have maybe sold that for cash.
Well, that's correct. That's correct. And that's why the association is embarking on a very dedicated and a very energetic, I would say, awareness campaign to make seniors aware that they ought to look at their life insurance policy. After all, it is an asset. It's an asset that they can sell, and it should be treated as a part of their whole investment portfolio. So it's an
and I'm glad you said that, because I want to underline the fact that it's personal property, it's an asset for the client,
correct.
And they really need to say, hey, there's a value here. There could be embedded value. I need to know about that.
That's correct.
Well, when we come back from the break, I want to talk about this. We're spending all this whole month, broadcasting about Life Insurance Awareness Month, and we're talking about Life Insurance Awareness Month for people who are dropping their policies, which could have gotten money for it. So I think that's really, I'm enthusiastic to bring it to our advisors and say that this is a place that you need to start looking at life settlements again. It's starting to come online, and we have funders. When we come back from the break, we're going to talk a little bit about how to get that done. It's not how much money you make for your clients, it's how much money they get to keep, especially in retirement. But retirement income could cause Social Security benefits to be taxed. One tax advantage alternative is life insurance, designed as a non-modified endowment contract that can generate tax-free income without taxing Social Security benefits. These contracts offer differing funding options depending upon your client's risk tolerance. For more information on how life insurance can be part of your retirement planning, just email me at steve@downtobusiness.tv. Brought to you by Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment. Of course, I'm with Darwin Baston, President and CEO of the Life Settlement Association. I have to say, Darwin, when I'm looking at this, people say that the life settlement market is being owned by a third party. A third party, do they really have insurance justification? That's the big argument always, right? Why am I doing this? But before we get into some of that disclosure information, let's separate the myth from the fact. We're not talking about STOLI.
We're not talking about STOLI.
Talk a little bit about that.
Okay. First of all, a life insurance settlement is the sale of a life insurance policy by a policyholder who finds that the policy is no longer needed, wanted, or perhaps affordable to a third party. That third party then becomes responsible to pay the premiums, and they get the death benefit when the insured passes away. Okay, so let's talk about what STOLI was. STOLI happens at the time that a policy is actually issued. That's not a life settlement at all. At the time a policy is issued, somewhere along the line, there was a willing person who was allowed themselves to have an insurance policy written on their life. There was an agent who sold that policy to them or made the application. And there was an insurance company that actually issued the policy. Now, let's be realistic. Somewhere along the line, people had an idea that, oh, I'll buy this insurance policy, it'll be financed, and perhaps I can sell it in a couple of years. So it wasn't until the point of sale, perhaps, that some of those policies that had been issued illegally found their way into the life settlement marketplace. Now, I think combined, the insurance industry, the Life Settlement Association certainly, and all the players worked very hard, very quickly to pass regulations against STOLI. So STOLI is no longer. So we're talking pure life insurance settlement. We bought this for original purpose. We had an indemnification need. It no longer exists. That's the only reason why we're looking at an alternative. That's right. Just like as an individuals, we buy other assets over the course of our lifetime for a purpose. And once the purpose of those or our needs change or whatever, we should look at all of those assets in terms of the possibility of selling. And simply sometimes the life policy is just no longer needed or affordable. I'm wondering, I'm thinking, a lot of seniors, you quoted this number in the first segment, there was a huge number. I mean, you were looking at 40 billion sitting there lapsing in coverage, and a lot of that's in the geriatric community. I'm just thinking, there's got to be a way to get the message out that this, I wouldn't want you to lapse. You need to look at this as a possible option. But when I'm looking at this, the buyer who buys the contract from the senior, as in our explanation here, when he buys the contract from the senior, they have to make the payments. They have to keep it in force. So he's going to be looking at, is there an internal rate of return? He's going to have a benchmark where he's going to say, that's my return I'm looking for. So he has to have a life report, some kind of a somebody to come with a little bit of jurisprudence here and say, I think the client's going to live based on his physiology and the issue of the policy, that we think he's going to live X amount, and then they make the call whether they're going to buy it or how much they're going to buy it for. That's correct. Okay, well, things have changed. I remember we had a major fiasco with several of the life
expectancy reporters coming out talking about shorter timelines that never occurred.
Yes.
So do you still see enthusiasm among funders? I know they're looking for contracts, but are they a little bit more conservative? Are they a little more wise to the report issues?
Well, I think they are. I think the level of sophistication and knowledge over the last 5 or 6 years from 2008 is significantly greater. People understand what they're doing more, but let's take it back to still its most simplistic thing about this. You have a consumer on one end who has a life insurance policy they don't need, don't want, or can afford, and they would like to sell that. And there's an investor on the and they're fairly, many of them are fairly unsophisticated. And you have an investor on the other end who is very sophisticated, and the goals of the two people are, one, the investor wants to have bought that policy at a price where they think the probability is quite good that they'll get some return within a range that's acceptable to them. Okay? And they want to know they're going to get the death benefit when the insured dies. And on the other end, the seller of the policy is simply trying to understand that they got paid fairly for it. So all of this activity in between that you were talking about, the life expectancy people and all, they're all trying to get that transaction to happen at some price. And we all know that the factor that probably affects that the greatest is how long that person is going to live, because you have to pay the premiums much longer and you wait for your money, and we know all that time value of money is very important. And there was a great misjudgment. It's complicated to try to figure out when people are necessarily going to die.
Well, it's interesting. We saw, and this came out about 5 years back, the Society of Actuaries put out the 2008 VBT tables, relative risk tables. And those valuation-based tables, not that they have become a mantra, and they're certainly not a CSO, so I want to make that straight, but they did bring a new number and a new activity of looking at longer timelines. And I noticed that the impaired risk market, which is everybody's target market for this, even the impaired risk market got a little bump in the extension of life expectancy. So we're used to that now. We're ready for that. We've learned, we've grown, we have matured as a market. So now that the funders are back and they're willing to pay, our issues are to advisors are, do we have policies that are being unused, untapped, and certainly I don't want to lapse it. I want somebody to look at this.
So it all has to do with awareness and education now. Education of those advisors about the people that they are advising, and education of the seniors themselves. They need to ask. I mean, we have so many millions of seniors who are so bad off financially, and they are unaware that they have this asset laying at their desk somewhere that could have value and help them have a better life in their retirement years, whether it's for health care or just plain enjoy life more. There is nothing more fearful to a senior than being old and broke, unless it's being old and broke and sick. And so therefore, I think even seniors themselves are going to try to find ways that they can have these assets and bring monetary value to them. And they're going to discover some of this on their own, but we're going to try to do a very, very major awareness and education to everybody involved, because I think our passion should be that no senior lapses a policy that they otherwise could have had value for. And for every advisor to be aware that that possibility exists, so they don't have clients that have that happen to them.
True enough. Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor and legal counsel or your broker-dealer compliance officer. Missed an episode? Just go out to our site, downtobusiness.brokerage.com. Want to email me? Just write me, steve@downtobusiness.tv. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. We'll see you tomorrow.